Thanks, Chrissy. Thanks to Vertical Events and Canaccord. What a great location for a conference, and thanks for everyone for coming along today. We are doing a talk about our Ta Qua nickel sulphide district in northern Vietnam. You can see there we've got a previously operating mine. It operated between 2013 and 2016, and the nickel price was much lower than it is today. We're going to turn the mine back on, but we're going to build a downstream nickel refining business and produce the first stage of the lithium-ion battery, which is called a nickel cobalt manganese precursor product. Not a good start with the clicker. And that's a waste of a slide there. We do have this district scale nickel sulphide opportunity. We believe we could have a world-class nickel sulphide district. We are going to take it downstream into that downstream product, which is the first stage of the lithium-ion battery. You can see there's a large demand coming for a high nickel cathode. So the initial lithium-ion battery had a ratio of nickel cobalt manganese of 1:1:1. There's a movement towards an 8:1:1 ratio. That's the product we're looking to produce from our downstream business. The downstream is very scalable and modular. We will scale this up because of the demand that's coming. You can see we need 1.5 million tonnes per annum as an industry. That's currently more than the world's supply of Class 1 nickel, and we need to find and develop and build a large, big challenge for the industry coming to produce that sort of metal. You can see here, these are the major players. We're looking to be in the top 5, around the same scale as BHP and Glencore. The Norilsk out of Russia, they're the largest player. They do about 250,000 tonnes per annum. And you can see there that that's nowhere near the demand that's coming from the lithium-ion battery. So we need 1.5 million tonnes per annum. So yeah, there's a lot of work there as an industry to feed into this demand that's coming. You can see there the movement towards that NCM 8:1:1 ratio. By 2030, that'll be the dominant chemistry mix. So that it's all about the long range that you get from nickel, and range anxiety is what's driving this high nickel cathode. We're well positioned in northern Vietnam. You can see the major players in this industry are the South Korean, Japanese, and the Chinese. We've focused most of our efforts on South Korea, and now we're getting a lot of interest out of Japan. And most of those groups we're already talking to. We also have EcoPro. They're the largest cathode manufacturer in the world out of South Korea. They're our major shareholder and our first partner. We believe there's room for multiple partners, and we're going to build a consortium of joint venture partners for this downstream business. The focus of our products is the fact that we can do it cleaner and greener than anyone else in the market. The industry is built on tired and dirty infrastructure that's set up for the stainless steel industry. We have an opportunity to do this clean and green from day one. That we're aiming for net zero from the start of this operation. Our peers are looking at net zero by 2050, so they're up against it. They've got tired, dirty infrastructure. We can do this because we've got two of the largest hydroelectric power plants on our doorstep and just near the mine. So we're already hooked into that hydroelectric power. We're using electric mining equipment, both for underground and open pit mining. We're going to use the pressure oxidation process, which is much cleaner and greener than the pyromet technology, which is used in the stainless steel industry. Well funded at the moment. The share price has gone for a bit of a run, but the price targets of those analysts are much higher than today's prices. I think today we closed at around 70 cents. The analysts are saying between $1 and $1.90. So you can see some very credible analysts there. I think Canaccord might have the lowest price target, so we won't talk too much about Canaccord today. But you can see there, there's some great names there and some good, real independent analysis. We also have Fidelity as a major shareholder, and EcoPro, they're the largest cathode manufacturer in the world, and Deutsche Balaton out of Germany has been a very supportive shareholder. So we've got some really strong institutional support, board and management with 12%. You can see the board and management team. We have Mr. Jung, he's the representative of EcoPro. We've also brought in Alison Gaines recently. She's a corporate governance expert, and that's really, driven that focus on highest level ESG compliance. And the three amigos on the left is we're the, I suppose, founders. Hamish and Andrew were the founders. I came in a little bit after, and our backgrounds in technical and corporate. So you can see here, there's two parts of our business. We have the upstream, which is the mine level, which is previously operating mine. We'll talk about that. But we'll focus really today on the downstream business. That's where the money is going to be made. That's where we're going to bring in the funding from the downstream partners. At the upstream level, we're also working with Trafigura as a feedstock partner, and we're looking at other future assets that we could potentially bring into this downstream refining business. So you can see there, we're going to take the concentrate from our mine and the third-party feed providers like Trafigura and other opportunities, and we're going to convert that concentrate into the precursor NCM 811 product. That's the first stage of the lithium-ion battery, and as long as we can find concentrate from around the world, we'll source it from Australia, Canada, Africa, South America, bring it into Vietnam, the lowest cost jurisdiction we've ever operated in, use that clean green power and upgrade it into that final product for the lithium-ion battery. That's the first stage of the process to a battery. So you add lithium to that NCM 811 product, and you have a cathode, and you add the anode to the cathode to produce a battery. So at the upstream level, we're just delineating the ore bodies. We have 25 targets. Of those 25, the first 5 have become mines. So we have 3 underground mines and 2 open pit mines from those first 5 targets, and another 20 targets to come. That'll all come out in the coming weeks. So we have maiden resources, updated resources in the next few weeks, and then we're going to push all that into our pre-feasibility study phase by the end of the year. And then we start that bankable study and restart of the concentrator, producing concentrate from our mine in 2024 to feed into our downstream business. You can see there, this is our district scale nickel sulphide opportunity. They're the first 5 targets. Ban Phuc and Ban Kwa are the open pit opportunities. King Snake, Ban Chang and Ta Kung are the undergrounds. So the undergrounds are massive sulphide, high grade, narrow vein underground mines. The disseminated are large scale, open pit, large tonnage, bulk tonnage, low strip ratios. This is Ban Phuc. It's 280,000 tonnes of nickel there. Very similar to Mount Keith in Western Australia. Mount Keith is around 0.5% nickel. We have a similar grade of nickel, but we've got all those byproducts as well. Platinum, palladium, all the precious metals, platinum group elements, but also copper and cobalt. This is one of our other open pit opportunities. So this will be our second open pit mine. This will add mine life. This is one of our underground mines. So these are the high-grade, narrow-vein, massive sulphide undergrounds. They also have these broader disseminated halos, which also have those strong byproduct credits. So, for instance, we have 1 gram per tonne in the precious metals, and we have 1% of copper in these ore bodies. So, very high-grade credits, and but the nickel also very high-grade in those massive sulphide veins. This one's King Snake, so this is another underground, narrow vein underground mining opportunity. So you can see there we have another 20 targets to test. The first 5 are mines, so 100% hit rate on those on the drilling, and we believe that we've got another 10 to 20 years of mining here at that Ta Kung nickel sulphide district. We've recently announced this collaboration with the Vietnamese government. The previous owners, for some reason, left this target out of the tenure. So we've gone to the government and said, can we have a look at Chim Van? Chim Van is 15 times the size of Ban Phuc. Ban Phuc is the first 10 years of the mine, and we've got a large-scale mag feature 10 kilometres away, and we're calling the Big Bertha, because that is a very large target, and very excited around this collaboration we have with the Vietnamese government to potentially bring that into our exploration licence over the coming months. So just in summary, we have 2 types of ore bodies feeding in from our Ta Kung district. We have the disseminated sulphide and the massive sulphide veins. The disseminators are the big open pits, and the massive sulphide veins are the small high-grade undergrounds. We top it up with our friends from Trafigura. They'll bring concentrate from all around the world into this clean and green refinery, and also other third-party feed providers. So other nickel miners out there that are not in offtake, we can work with them and bring their nickel into this refinery as well. So at the refining level of the downstream business, these are the highlights of our recent pre-feasibility study. We have strong return on investment, $2 billion NPV at a very conservative pricing model. If we use today's pricing, that's $3.5 billion for a $491 million capex, so very strong return on investment on this downstream business. Very well located in this northern Vietnam region. Have a look, keep an eye on that logo down there, the big V. It's not the Victorians, this is the Vietnamese VinFast. They are Vietnam's answer to Tesla, and they're looking at a $60 billion IPO on the NASDAQ. So they're producing electric vehicles today, coming off the factory floor today, down the road from this nickel mine. So you can assume that we're talking to VinFast because they need a lot of nickel for their electric vehicles. This downstream business is built on this chart basically. We can buy nickel concentrate from our mine at arm's length and other third-party feed providers at 75% or a 25% discount to the LME nickel price. We convert it into NCM 811, that trades at a 120 to 140% payability. We're effectively doubling the value of the nickel by combining it with cobalt and manganese in that ratio of 811. And we're doing it through tried and tested technology. It's a pressure oxidation process, a solvent extraction process. These are technologies we've been using in the mining industry since the 1960s. So there's nothing new or novel about this flow sheet. We do have some good byproducts. Kieserite, that's a fertiliser product, so that's a green fertiliser product. Copper cathode, obviously, and the precious metals. We're also looking at replacing the oxygen plant with an electrolyser, which would produce green hydrogen as a byproduct. Very excited about this flow sheet, and there's been a lot of good work behind this flow sheet over the previous months. So just on the economics, so the economics are driven by the premium that we get for the NCM 811 product and the payability or the discount that we can purchase nickel at in that concentrate form. So you can see there, as that premium moves around, as does the NPV. If you're using today's premium, which is 40%, it's a $3.5 billion NPV. So you can see that premium has traded between 20 and 40% since it's been recorded. We've conservatively used 20% as our base case, and that's a $2 billion NPV. We're confident that premium will continue because of that strong demand that's coming from the lithium-ion battery. Because of that strong premium, combined with the low operating cost environment and the hydroelectric power, we can pay a little bit extra for our concentrate. So any concentrate that's in the market, we can see here, we pay 5 or 10% above market rate, and we're still driving very strong NPVs in the order of $3 billion. So just in summary, we've completed the pre-feasibility study. We've just engaged Wood. They're the biggest name in hydromet. We've started the pilot plant phase. The next 12 months is about de-risking this from a technical and a funding perspective. We'll bring in those big partners. They will fund this. We're not going to dilute the shareholders. Don't you worry, we're shareholders ourselves. We'll restart and build this refinery and produce our NCM 811 products in 2024. Thank you for your time.
Well done.